Good morning, everyone, and welcome to the Center for American Progress Action Fund. Thank you all for coming out this morning. We will be getting started in just a minute. 2 brief reminders before we begin. First, please silence all cell phones and other electronic devices. Second, we are at full capacity. If you have an empty seat next to you, can you please raise your hand and let one of our fellow attendees sit next to you? Thank you.
Good morning, everyone. My name is Neera Tandon. I'm president of the Center for American Progress Action Fund, and on behalf of everyone at American Progress, I want to welcome all of you to this incredibly important event. While Donald Trump and his allies have continued to hold our country hostage during day 26 of this government shutdown, I am so glad to report that at least some of our nation's leaders are still upholding their duties and responsibilities on behalf of the American people. Democrats have now taken over leadership of the House Financial Services Committee for the first time in 8 years. And they're certainly, oh yes! And they certainly have a long list of pressing issues to address. That is because Republicans in Congress have relentlessly pursued an agenda to rig our economy in favor of big corporations and, sadly, the ultra-rich, and their efforts have only intensified under the Trump presidency. The GOP promised that the Tax Cuts and Jobs Act would bring real prosperity to working and middle-class families. But since the Republicans passed this tax bill, corporate profits, when adjusted for inflation, have soared by an astounding 17%. At the same time, wages for the typical American worker have risen by a meager 0.02%. Let me say that again. Corporate profits have risen by 17%, while wages have increased by 0.2%. Republicans have pursued a policy agenda that drives this result, not just with the tax cuts, but they've done everything possible to repeal the Dodd-Frank Act and to roll back vital safeguards that were introduced in the wake of the financial crisis. During his tenure as head of the Consumer Financial Protection Bureau, Mick Mulvaney also worked tirelessly to erode the agency from within, including his decision to strip power away from the office which protects communities of color against lending discrimination. It is crystal clear that House Democrats will need bold and decisive leadership if they want to repair all the damage that we've seen over the last several years. Fortunately, I can think of no one more able, no more dynamic leader, no more fearless leader in America today than the new chairwoman of the House Financial Services Committee and our special guest for this morning, Representative Maxine Waters. Congresswoman Waters has stood as one of the most prominent voices really trying to hold Donald Trump accountable for what he's doing to the American people. Her declaration about reclaiming my time, I have the t-shirt, during a showdown with Treasury Secretary Steve Mnuchin has become a rallying cry for the entire resistance. Representative Waters has dedicated her entire career to achieving greater economic, social, and racial justice for communities in Southern California and all throughout our country. Earlier this month, she became the first woman and first African American in history to lead the Financial Services Committee. I cannot wait to see the new sense of accountability and commitment to real values for all Americans, not just a few, that she will bring to this role. I'll have the honor of moderating a conversation with Chairwoman Waters in a few minutes. But first, we are very privileged to hear about her vision for the community's future. So please help me give an incredibly warm welcome of applause for Congresswoman Maxine Waters.
Thank you very much. Good morning, everyone. Nira, I want to thank you for the very warm welcome to the Center for American Progress and for the Center holding this event. CAP's research and policy work are highly respected and a valued resource for members of Congress and our staffs. I'm very pleased to be here with you today to discuss the new Congress and my priorities as chairwoman of the House Financial Services Committee. It is not the first time that I've been here, and each time I have benefited from the audiences that you bring to these kinds of events. I'm deeply honored to have been selected by my colleagues to become the first woman and the first African American to serve as chair of the Financial Services Committee. I've served on the committee since 1991, and since 1995, I have served as ranking member or chairwoman of every subcommittee under the committee's jurisdiction, and have taken on important issues on behalf of consumers, investors, and vulnerable families. And so I considered it a privilege to hold the gavel, and I'm looking forward to working with my colleagues on the committee on the many critical issues we're responsible for. Now, given the current circumstances in Washington, I would first like to address the shutdown and its impact on the important programs under the financial services jurisdiction. We are now in the midst of the longest government shutdown in history, all because this president is throwing a tantrum about a senseless border wall. The Trump shutdown is harming hardworking Americans and our financial markets. The shutdown has all but closed the doors of the Securities and Exchange Commission, which is Wall Street's cop on the block. As a result of the shutdown, the SEC is unable to carry out most enforcement actions against bad actors. Businesses planning to enter the stock market for the first time through an initial public offering, that is an IPO, may be delayed because the SEC cannot approve their documents, harming American entrepreneurs and job creation. The shutdown also has a serious impact on critical housing programs. 95% of the Department of Housing and Urban Development staff has been furloughed. Millions of families that rely on HUD rental assistance programs are perilously close to losing their homes due to projected lapses in funding. What's more, it was recently reported that HUD, under Secretary Carson's leadership, has failed to follow its own contingency plan, and as a result, 1,150 project-based rental assistance contracts have expired, with hundreds more hanging in the balance if this shutdown does not end. Families aspiring to the American dream of home ownership may have their Federal Housing Administration, that is FHA, or rural housing loans delayed or be unable to close their loans during this shutdown. And in rural communities, very low-income elderly homeowners who rely on HUD grants and loans to address health and safety hazards may not receive disbursements, and as a result, may be forced to live in dangerous conditions. These are just a few examples of the serious ways that this shutdown is harming American families and businesses. This shutdown must end immediately. I call on Republicans in Congress to join with us and put a stop to it and open the government so that we can put an end to all of the harm that this shutdown is causing. A word about the Consumer Financial Protection Bureau and financial regulation. An ongoing priority for me is ensuring that we have a strong Consumer Financial Protection Bureau and strong financial regulation that protects consumers, investors, and our economy. Let's talk about why the Consumer Bureau is so important. We all remember how devastating the financial crisis was. 11 million Americans lost their homes. 13 trillion in wealth was lost. Nearly 9 million Americans lost their jobs, and the unemployment rate hit 10%. It was catastrophic for communities across the country. The crisis was a result of Wall Street running amok, with abusive institutions peddling toxic products like no-doc loans, interest-only mortgages, and other predatory products, with no agency responsible for prioritizing our consumer protection needs. Ultimately, the economy was sent tumbling into the abyss. In response, Democrats crafted the Dodd-Frank Wall Street Reform and Consumer Protection Act to improve accountability in the financial system and protect customers and consumers, investors, and the economy from abusive Wall Street practices. At the centerpiece of the law, we created the Consumer Financial Protection Bureau, which is the only federal agency solely dedicated to protecting consumers from being ripped off by financial firms. Under former Director Richard Cordray, the Consumer Bureau returned $12 billion to more than 30 million harmed consumers, handled over 1.3 million consumer complaints about financial institutions, implemented much-needed rules on mortgages, prepaid cards, payday loans, and auto title loans, required clear disclosures from financial institutions, and provided consumers with easy-to-understand materials to empower them to make the very best decisions. But congressional Republicans and the Trump administration have been determined to undermine and destroy the Consumer Bureau. Trump installed Mick Mulvaney, his budget director, to serve as acting director of the Consumer Bureau. And during his tenure, Mulvaney made it a priority to dismantle the Consumer Bureau from within. To name just a few of his actions, Mulvaney fired all members of the Consumer Advisory Board and requested $0 in operating funds for the Consumer Bureau from the Federal Reserve. He also created an Office of Cost-Benefit Analysis as a way to internally block important regulations under the guise of cost-benefit analysis. He also moved to strip the Consumer Bureau's Office of Fair Lending and Equal Opportunity of its enforcement and supervisory authority. But that's not all. Mulvaney closed the Office of Students and Young Consumers at a time when 44 million student borrowers collectively carry $1.5 trillion in student loan debt. He also helped out the payday lenders. For example, he withdrew a lawsuit against a group of deceptive payday lenders who allegedly failed to disclose the true cost of loans, which carried interest rates as high as $950, 50% a year. Now, Kathy Kraninger has confirmed as the new director in December, and we will see. She's been confirmed, and we will see what she does. Mulvaney has since moved on to become the president's acting chief of staff. But I've written to Mr. Mulvaney to inform him that while his time running the Consumer Bureau may be over, the time for accountability for his actions is about to begin. This Congress, I'm going to be working diligently to undo the damage that Mulvaney has wrought during his time at the Consumer Bureau. I have a bill, the Consumers First Act, that reverses many of the known harmful actions, which I will soon be reintroducing. But it's not just Mick Mulvaney who I will be paying attention to. I will be keeping a watchful eye on all of the financial regulators to make sure they're carrying out their statutory duties, including holding bad actors accountable and promoting financial stability. As we saw during the 2008 financial crisis, large Wall Street banks that aren't subject to strong oversight and safeguards to protect our economy can do a lot of damage. And so in Dodd-Frank, we put in place robust reforms for our largest and most complex financial institutions, including increased capital, reduced leverage, improved liquidity, vigorous stress testing, and thorough living wills, all designed to improve financial stability. Dodd-Frank established the Financial Stability Oversight Council to eliminate regulatory gaps and improve oversight of the entire financial system, including shadow banking. Dodd-Frank also established the Volcker Rule to ensure that big banks don't just gamble away their customers' deposits. All of these reforms are designed to help prevent a future financial crisis. And so the committee will be paying close attention to whether financial regulators try to weaken these important reforms, and we will be keeping an eye on the big banks and their activities, included by holding many hearings. Regulators also need to address the evolving financial marketplace appropriately. One emerging area the Financial Services Committee will be paying very close attention to is the growth of financial technology, or so-called fintech firms. As Americans are banking and accessing credit in new ways, it is important that we encourage responsible innovation with the appropriate safeguards in place to protect our customers and consumers without displacing community banks and credit unions. I have great hopes that fintech firms can open up opportunities for those who have been excluded from access to responsible credit. But I strongly believe that there must be strong protections for consumers of these financial products and that abusive payday lending practices must not be allowed. As the fintech sector grows, there are opportunities for unmet credit needs to be addressed, as well as risks that minority communities may be preyed upon or discriminated against by some of these companies. So we will be closely examining these issues in committee to make sure that our regulators eliminate the risk and meet the opportunities. Credit reporting is another issue I will be scrutinizing. In the wake of the Equifax data breach, it is absolutely critical for Congress to reform the nation's credit reporting system. We need to shift the burden of removing the mistakes from credit reports onto credit bureaus and furnishers and away from the consumers. We also need to place limits on credit checks for employment purposes, reduce the time period that negative items stay on credit reports, and make other reforms to fix the serious problems with the credit reporting sector. For the sake of consumers across the country, credit reporting needs a comprehensive overhaul. A bit about housing. A very important issue we will be bringing renewed attention to in the financial services community is housing. This country is experiencing a housing affordability and homelessness crisis. Today, there are over 500,000 people out there experiencing homelessness right here in the richest country in the world, over 1/5 of whom are children. This includes veterans who we failed to support when they return home after serving our country, women fleeing domestic violence, people who have left prison after serving their debt to society, and people who have simply fallen on hard times. It is simply shameful, and Congress indeed has a responsibility to act. To tackle the homelessness crisis, Congress needs to provide a surge of funding and resources. Just as Congress puts billions of dollars into defense spending, we must provide the funding necessary to ensure that all Americans have access to safe, decent, and affordable housing. And so, I will soon be reintroducing my bill, the Ending Homelessness Act, which would help to ensure that every American has a safe, decent, and affordable place to call home. The bill provides $13.27 billion in new funding over 12 years to federal programs and initiatives to prevent homelessness. In addition, we will be holding committee hearings on homelessness and important housing issues that have gone ignored during the last Congress in order to elevate housing issues into a national discussion and present proactive solutions and remedies. The committee also has a responsibility to look at our housing finance system and address the fates of Fannie Mae and Freddie Mac, the government-sponsored enterprises. The GSEs have been in government conservatorship for more than a decade. Contrary to Republican claims, Fannie Mae and Freddie Mac did not cause the financial crisis. The Financial Crisis Inquiry Commission and others have made that clear. The financial crisis was driven by predatory lending, the private market packaging those toxic, risky loans to securities and then selling those securities to unsuspecting investors. Fannie and Freddie did not drive those actions. The events that transpired during the crisis made clear the need for their reform. When it comes to housing finance reform, I've advocated for core principles that I believe should be a part of any legislative efforts to address the future of housing finance reform. The principles include maintaining access to 30-year fixed-rate mortgage, ensuring sufficient private capital is in place to protect taxpayers, providing stability and liquidity so that we can withstand any future financial crisis, ensuring a smooth transition to a new finance system, requiring transparency and standardization in a way that ensures level playing field for all financial institutions, especially credit unions and our community banks, maintaining access for all qualified borrowers that can sustain home ownership and serving homeowners of the future, and of course, ensuring access to affordable rental housing. It is particularly important to ensure that underserved borrowers and communities are not overlooked. This means housing finance reform will need to include a comprehensive strategy around the access to affordable mortgage credit, as well as access to affordable rental housing. So also is important for housing access is the rigorous enforcement of our fair housing laws. Unfortunately, our fight to make progress on fair housing has become much more challenging under the Trump administration. Let's not forget that President Trump was sued by the government for serious violations of the Fair Housing Act. Under Trump's leadership, the affirmatively furthering fair housing mandate under the Fair Housing Act was badly undercut when Secretary Carson halted implementation of the Obama administration's affirmatively furthering fair housing rule. In fact, Secretary Carson once likened the rule to a, quote, failed social experiment, quote, unquote. Secretary Carson has also reportedly proposed taking the words, quote, free from discrimination, quote, unquote, out of HUD's mission statement. He also reportedly halted several fair housing investigations and sidelined top advisors in HUD's Office of Fair Housing Enforcement. These are unprecedented attacks on fair housing that we simply cannot stand for. To that end, in addition to conducting robust oversight of the Trump administration's activities at HUD, I will be introducing the Restoring Fair Housing Protections Act, my bill to reverse the harmful steps taken by Secretary Carson and the Trump administration to undermine fair housing. So I promise to continue to stand up for fair housing opportunities for all people. A word about something new that I've decided to do with this committee. This is another very important issue that I'm going to continue to work on as chairwoman, and that is diversity and inclusion. As a nation, we're becoming increasingly diverse racially and ethnically. The U.S. Census Bureau estimates that more than half of all Americans will belong to a minority group by the year 2044. At the same time, there's a growing body of research showing a connection between the level of diversity at a company and the strength of its financial performance. Despite these facts, the Government Accountability Office, that is the GAO, has found a continued trend of low representation of minorities and women in the financial services industry. Minorities and women have particularly low representation at the senior levels within the financial services industry. This needs to change. Diverse representation in these institutions, and particularly at the management level, is essential to ensure that all consumers have fair access to credit, capital, and banking and financial services. Now, as many of you know, I believe it is essential to promote better workforce and supplier diversity. I'm one of the proud authors of Section 1116 of the Housing and Economic Recovery Act and Section 342 of the Dodd-Frank Act. Together, these provisions direct most of the federal financial services agency to create offices of minority and women inclusion, which we refer to as OMWIs. OMWIs have the important responsibility of overseeing all diversity matters in management, employment, and business activities at their agencies. The creation of these offices was a major step forward, but we all know that laws that promote racial, ethnic, and gender equality are only as strong as the implementation and enforcement of these laws. And congressional oversight is absolutely essential to ensure that implementation and enforcement are strong. So I'm very pleased and proud to announce that I will be creating this subcommittee on diversity and inclusion. The subcommittee will be the first of its kind in Congress. I am dedicated to looking at diversity and inclusion issues under the committee's jurisdiction. A bit about international affairs. Turning to the international jurisdiction of the committee, I plan to focus on the important world of the World Bank and the regional development banks in ending global poverty. We have in the past worked in a bipartisan fashion to support the International Monetary Fund, that is IMF, in times of crisis, at the same time that we press the fund to pay more attention to the social dimension of problems when decisions about economic assistance are made. While the spirit of cooperation on issues related to global economic governance in Congress has been lacking, I'm optimistic that this Congress will see renewed bipartisan action. Under my leadership, the Financial Services Committee will ensure that accountability and effectiveness at the international financial institutions remain strong, that broad public debate about IMF's and the multilateral development banks' policies remains active, and that the international interests of poverty, alleviation, growth, and economic stability continue to be advanced. A bit about sanctions. Another area that I hope will be bipartisan is the issue of protecting American interests and democratic institutions from assault both internally and from abroad. This brings me to the issue of U.S. sanctions against Russia for its hostile actions and its efforts to undermine the U.S. presidential election. I believe the administration's approach to Russia sanctions has been haphazard and weak, as well as inconsistent with its approach to sanctions imposed on other countries such as Iran. I'm very concerned about the Treasury Department's recent actions to lift sanctions businesses connected to Oleg Deripaska. Deripaska is a Russian oligarch with close ties to Vladimir Putin, who also has a history with Paul Manafort, former Trump campaign chairman who has been convicted of serious financial crimes uncovered as a result of special counsel Mueller's investigation into Russian interference in the last presidential election. What's more, Deripaska has faced numerous allegations of criminal activity and was cited by the Treasury Department in April as saying he does not separate himself from the Russian state. I believe the delisting agreement for Deripaska's companies is too favorable to Deripaska, including by allowing him to benefit potentially tens of millions of dollars in debt forgiveness by transferring some of his shares to a Russian bank to satisfy debts that Deripaska owes to that bank. I don't believe Deripaska should be allowed to retain any influence or level of control over these companies. So I look forward to working with my colleagues in both chambers and across the aisle to closely monitor all future developments on Russian sanctions, to hold the administration accountable for its actions in this area, and to ensure that the strongest possible sanctions against Russia are implemented and remain in place. I would like to take a few minutes to address how I will approach working with my colleagues on the other side of the aisle as chairwoman. Throughout my career, I have looked for opportunities to build consensus and work across the aisle on common sense solutions to benefit hardworking Americans. As chairwoman, I will continue to find areas where we can all work together. Ranking Member McHenry and I do have a relationship, and just last Congress we worked together on several bills. The Fix Crowdfunding Act to boost crowdfunding and enhance investor protections, and the Supporting America's Innovators Act to make it easier for more angel investors to finance startup companies and small businesses. The Supporting America's Innovators Act did become law. So previously, we've worked together on Promoting Transparent Standards for Corporate Insiders Act, a bill to limit the ability of corporate insiders to illegally trade on non-public information. I'm very pleased to announce that Ranking Member McHenry and I are reintroducing the Promoting Corporate Standards for Corporate Insiders Act together. So I'm very hopeful that we will be able to get some good bipartisan work done in committee. Some of the big issues we're going to try to work in a bipartisan basis include long-term reauthorization and reform of the National Flood Insurance Program, terrorism risk insurance, and the reauthorization of the job-creating Export-Import Bank. So in conclusion, it is a new day in Congress for the Financial Services Committee. As chairwoman, I will continue to work every day to create opportunities for hardworking Americans, ensure fairness, and protect the economic well-being of all Americans. I will also continue to hold this administration accountable and its appointees accountable. And so with that, ladies and gentlemen, I want to thank you for being here today, and I certainly want to thank the Center for American Progress for providing me the opportunity to share with you my agenda and some of my thoughts. Thank you very much.
Great. Thank you. You should sit here. Thank you so much, Madam Chairwoman, for your for being here and for sharing your thoughts with us. I have a fair number of questions, but I really want to start off with a sort of global question. I think so many people have seen the House Financial Services Committee as one that has, at least in the past, disproportionately favored the voices of the financial services industry instead of the voices of people who are supposed to be served by the financial services industry. And I was struck by the breadth of your agenda and the many areas of, many diverse areas from international to domestic issues. But I guess I would just love to get your perspective on that difference, on the focus on consumers, and the focus of where you started your remarks, middle-class families, and how they are served or ill-served by industry, and the break that you see going forward.
Well, Anira, I talked a bit about the Consumer Financial Protection Bureau, and I consider that the centerpiece of the Dodd-Frank reforms. What we discovered was that there was no real agency focused on consumers, looking out for consumers. Consumers really didn't have anywhere to turn. Of course, there was no focus, and so consumers found that they really could not effectively deal with these financial services agencies and with the big banks and financial institutions. And so creating the Consumer Financial Protection Bureau was very important, and it has been very effective. And as we know, Mick Mulvaney came with his direct intent to undermine and destroy the Consumer Financial Protection Bureau. It was the most hated agency by the former chairman of the committee, and the Republicans, of course, on the opposite side of the aisle. They called him up time and time again. They berated him. They tried to break him down, but he was very strong. He stood up. He worked for the consumers. And now consumers know that there can be, and there has been something in government to look out for their interests. And we've got to restore their faith in that possibility by making sure that we undo the harm that Mulvaney has done.
That's great. Thank you so much, because obviously that has been a real concern over the last several years. And I'm not sure how many jobs Mick Mulvaney has at this point, but it's like 5 too many. So I wanted to just pick up on a few pieces. You've outlined a rich housing agenda.
That's right.
And I noted one area you discussed, which is rental housing and lack of affordability.
Yes.
Your state, California, the new governor has addressed housing affordability as a major issue. That's obviously a real crisis in cities around the country. And I think it's also just a breath of fresh air for the House Financial Services Committee to actually focus on housing, which has been in a way that's helpful to consumers. But how do you see the specific issue of rental, ensuring that middle-class families can afford rent and mortgages as you go?
Well, one of the things that we discovered after 2008, while we focused an awful lot on what was happening with our big banks and financial institutions and the foreclosures that were taking place, the families that were losing their homes, was that they had to look for rental housing. Mm-hmm. And of course, they discovered that not enough rental housing was available, and then the price of rental housing was increasing. And the price of rental housing was increasing because the hedge funds got into the business. And when the hedge funds got into the business, they were able to buy up large quantities of housing that we consider, for the most part, pennies on the dollar, because they were buying such large amounts. And instead of putting those houses back on the market, they turned them into rental housing. And of course, they began to raise the rents. They have not invested in repair and upgrading in those housing. And so we have people now who are being displaced and put out of the rental housing because of the increase in rents. We need to develop more affordable housing. As you know, Barty Frank, and I and others worked on the fund, the National Housing Trust Fund. And we were supposed to get those dollars from the GSEs as they paid off their debt and they were realizing profits. We felt that some of that money should go into development of low-income housing. But as it turns out, at the time, the guy who headed the FHFA, decided that money should just go back into the general fund. And so we lost a great portion of that money. But it costs money. You cannot do it without resources. Yeah. And so I'm committed, as I've said, to a huge bill on homelessness, $13.9, I believe, billion. We've got to do that. And we've got to work closely with those who are interested in developing low-income housing to ensure that they get some help from our government to do that.
That's fantastic. I wanted to turn to another area that you raised, which is diversity, and the news of creating a new subcommittee, which is really exciting. We've done a lot of work at CAP over the last several years about how diverse boards and diverse companies are more profitable, as you pointed out. Other countries have had systems of quotas, but obviously, even in our country, we don't have any, there's no requirement of reporting. What do you see as the agenda on this issue? I think just even the fact that you're talking about it has made some real changes. Companies are already responding just by the prioritization. So I really want to commend you for that. But as you see us going forward, or you see the committee going forward, how do you see that work? How do you see that work of actually making America's companies actually reflect the country itself?
Well, as you just alluded to, the discussion. Mm-hmm. Opening up this discussion is extremely important. In addition to that, I think that this subcommittee must do some very basic initial work of compiling the data, compiling the information about what is really going on in not only the financial services community, but in our country with major corporations. I recently took a visit to Silicon Valley, where I was able to visit some of the technology firms. And of course, there's been a lot of talk about the lack of diversity in the technology funds, but I was really a bit shocked to find out that it was so bad, that there were so few minorities and particularly blacks and Latinos that had been hired in these industries. And so it is important for our subcommittee to compile the information, to get the data, to show what is going on. This will not only help people to understand the importance of the discussion, but it will also help the industries reflect on what they have not done. The other thing I think that we need to do with the Diversity Committee is to help talk about outreach and how to bring people into these industries. Oftentimes, we have the excuses that are made that, well, we had this opening, or we have these openings, but we couldn't find the qualified people, and we can't find the qualified minorities. Well, that excuse won't work anymore. It won't work anymore because we know that there are so many young people and millennials who are out there, who have gone to school, who have graduated, who are creative, who are looking for careers, and they are finding that they're getting lost in these systems where you simply apply on the internet, and someone sits and they look at the applications and they decide which ones fit the profile of that job that is being sought, to get someone to fill. Now, I know that this doesn't work because my grandson got one of those jobs looking at the applications. He had just graduated from college. He didn't know what the hell he was doing. And so a lot of those...
I won't tell him what you said.
Oh, he knows. I tell him all the time. We laugh about it. And some of those applications got put aside. And that's not how to do it.
Yeah.
We have to come up with new systems.
Yeah.
We know that technology is extremely important. We know the internet is important. You don't have the old unemployment offices where you go in and you sit down and fill out an application. But we think that a lot more can be done to make sure that people have an equal chance to present themselves and to show what they can do and be able to talk face-to-face with someone. And so we're going to be talking about how to increase discussion in ways by which to do that kind of outreach and to provide these opportunities. Those are just some of the things that we're going to do. The other thing that we have to do is we have to convince people who have been turned down for so long that it's a new day. And things are happening. Don't give up, because a lot of young people get turned off and they stop trying. And many of them try and figure out how they can maybe start a business themselves, and then they turn to the banks and there's no access to capital. And so I think that we can encourage young people, our millennials in particular. Number one, don't give up. Number two, we're also working with fintechs, and I'm still working with the banks about access to capital. So this is the kind of work that we want to do, and it's the kind of work that really has not been done effectively in the past. You talk about housing, and you talk about diversity. You talk about issues that this committee has not been focused on. This was known as the Juice Committee. There's no more juice in this committee.
There's juice now. There's juice now.
In this committee, we're going to have a committee that's focused on these issues to see what we can do to strengthen families, to strengthen our young people who are coming out of college, to make sure that these families have the benefit of the earnings that they are making and that they don't get ripped off and reduce their ability to have a decent quality of life. So if you take a look at our new committee, you will see that it is diverse. We have a lot of new people on the committee, people who have come, having expressed in their campaigns what they care about, that they care about looking out for families. They care about making sure that our big financial institutions are held accountable. And so they didn't just start thinking about this coming onto the committee. They wanted to come onto the committee. They know many of these issues, and they're prepared to fight for our families.
Amen, sister. I know we only have time for a few more questions, so I'll get to just two really important ones. One, you started off the discussion on really the Trump administration's assault on Dodd-Frank and other ways in which we basically, as a country, went through the great financial crisis, and then the Congress responded. The congressional response was the Dodd-Frank Act, amongst other things. The Dodd-Frank Act actually relies on a lot of regulatory infrastructure, much of which seems to be very weakened. Yes. I think one of the great challenges and concerns people have is that this administration creates crisis day after day after day and seems ill-equipped to deal with the next crisis. While they're attacking the means by which we would protect consumers in the next crisis. So I think accountability was such a huge part of the midterm elections. And how do you see, or could you just describe more how you see the committee's role in the backdrop of an administration that seems ill-prepared for challenges, seems basically catering to the industry? How are you going to protect consumers so we don't have another financial crisis again?
Well, this administration has demonstrated that that's not something they care about. That's not on the agenda. Yeah. Protecting families and making sure that we have the kind of consumer protection that people can rely on. They have not been interested in that at all. So simply by introducing the legislation from my side of this committee will be new and refreshing and will help people understand that we're defining who we are and what we care about, and we're acting on it. So we're not relying on this administration for much of anything. I will work with those on the opposite side of the aisle who want to work on issues that we are alluding to. But of course, if they don't, I have the gavel. And so we're going to we're going to introduce our legislation. We're going to take it to the floor, and we're going to get it passed. We're going to do everything that we can to work very closely with the Senate. And of course, I believe that the Senate is going to join with us on many of these bills, with a few Republicans adding on, and then we're going to send it to whoever is president at the time. And of course, the president has the option of vetoing our bills, but of course, we have the option of overturning a veto.
Absolutely.
And so we're in this to fight and to work hard and not back down, and to ensure that the American people know that there's another way of looking at their government. Right now, you're right. We have crisis after crisis. Mm-hmm. We have a dysfunctional White House. They cannot be depended on. You don't know what you're going to wake up to the next day. And at some point in time, even those who are standing with this president are going to have to walk away because even with the shutdown, as I have said over and over again, many of these people who supported him, it's going to be hard for them to stick with him when they can't pay the rent, when the car is repossessed, when the children need shoes. They're going to have to realize that they have to do something different, and that they cannot rely on this president or this administration.
So my final question is on an issue you raised, which is access to capital. We know that for every $1 of wealth a black family owns, a white family has $10. So the racial wealth gap is really a crisis in the country. And research shows that factors like income and education don't actually protect against the wealth gap. So in other words, basically, African Americans with high education still have lower wealth levels than their white counterparts. So access to capital has been one of the historic ways in which the wealth gap has really grown. And so I think one of the really critical aspects of the new committee and and the outlook is addressing issues that haven't really been at the forefront of the financial services industry. How do you see that issue as part of your agenda?
Well, you're absolutely correct about what has happened on this issue of access to capital. Housing is extremely important as we discuss access to capital. First of all, to get into a home, oftentimes you will have the kind of appreciation that will allow you to gain resources and capital by which to invest in opportunities. And so paying attention to housing is extremely important. Aside from that, it's the American dream. You know, we are raised and reared believing that if you're going to be a real productive, involved citizen, you got to own a home. I don't know if that's absolutely true, but it is something that we have internalized. And so housing is extremely important, and it's important in building resources and the ability to gain the kind of resources that will allow you to invest. The other thing that we have discovered is plain old discrimination, period. One of the things that we discovered as we looked into the crisis of 2008 at what was happening with these foreclosures was that people of color, minorities, were charged higher interest rates despite the fact they earned the equal amount of money as whites. They had equal amount of education. They paid their bills, adequately, but they were discriminated against. Every time you are discriminated against in the way that people charge you for goods and services, it reduces your ability to have the funds that you need to have a better quality of life. And so we've got to deal with discrimination and exclusion. That's why this diversity committee, and we are working to close the wealth gap if we can. One of the things that we are told that it is so big now, it will never be closed, but we can do better. And we're going to work very hard at doing that.
Thank you so much. I really have to we're so grateful to host your speech at the Center for American Progress. And I want to just say, over many years, you have been a really fearless leader and a champion for so many people who don't have a voice in politics. And the idea that you are Madam Chairwoman of the Financial Services Committee is an incredible breath of fresh air. So thank you for your leadership and thank you for being here.
Welcome. Thank you. Thank you very much. Thank you.
Hi, everyone. I just want to say thank you for joining us today. We just ask that you remain in your seats for 1 second while we get the chairwoman to our next event. Thanks so much.